In this video, traders, we're going to look at best advice from 7 of the top traders and investors in the world. Stay tuned. Hey traders, a very warm welcome to you. Okay, so to get better at something, you study the greats. You learn from other people's successes. You grab little nuggets of information, little tips, little hints, things they've made massive mistakes over, things they've learned over their time, and you try and take those for yourself to make you a better trader, a better business person, a better athlete, whatever you're doing. So, top traders, always good to study, whether you're an investor, trader, long-term, short-term, swing trader, whatever it is. Just looking at the greats can help you get a better strategy and a better approach for your own trading. Okay, so 7 top traders, great quotes from the top traders. Bernard Baruch, okay, don't be a jack of all investments. I've said this before many times in videos in regards to day trading or short-term trading or swing trading. The best way to trade is to focus on 1 or 2 or 3, maybe up to 5, but the point is not massive amounts of markets or strategies. You choose to be an expert in this strategy or you choose to be an expert in these markets, preferably a bit of both. So you've got a few strategies that you're very, very good at trading and a few markets you're very, very good at. So from an investment perspective, it's, hey, I'm very good at investing in gold miners. I'm very good at investing in tech. I understand retail. I understand the flow of this or whatever it may be. Becoming the expert means that you know when to strike, when to get out, when things aren't right. It's way better than just looking at something from a layman's perspective on not understanding it. And guys, when you've got big hitters like that saying it, and he's not the only guy who says it, I would guess that all of these will say the same thing. And actually it's a common theme that runs through all of these guys and all the big traders is exactly that. They're very similar in the message they deliver, as we'll see later on. All right, number 2. Warren Buffett, be fearful when others are greedy and be greedy when others are fearful. Didn't write the last bit on there, but that's what it says. Being fearful when others are greedy. What does it actually mean by that? He means, and as we know, if you study Warren Buffett, his success comes from buying good companies at cheap prices. That's pretty much it. That's all he does. He waits for the right companies to be at the right price. That may mean he has to wait 10, 20 years for it. Fine. He just doesn't buy something at a high price. He buys value. And so that ethos of being fearful when others are greedy means, hey, when things are really, really toppy and everyone's getting excited by it, he doesn't buy. Doesn't necessarily sell, but he says doesn't buy. Other way around, that's how he makes his great trades, his great investments. He waits until others are really scared and don't want to do any buying. And he says, that's value, that's value, that's value. I'll have that, I'll have that, I'll have that. And he's made the money he has today. All right, number 3. Success is a personal choice. Initially, making the right choices is difficult, and that's Ray Dalio. Ray Dalio is an interesting character. He's obviously one of the most successful hedge fund managers out there with Bridgewater Capital. He has got some really unique takes on things, and he looks at things very, very differently. And I like this. This is why I've picked this one out specifically. Success is a personal choice. When you think about from a trading perspective, and then there's what this channel's about, guys, trading and investing, you think about the choices you make to get into trading. You think about the choices you make before you pull the trigger. You think about the choices you make to prepare for each trading day. You think about the choices you make after you've taken a loss or a win. It is about the right choices, and we can be coached and guided with the right choices by educating ourselves and learning from the others and the best and what have you. But ultimately, it does come round to the personal choice. But this is the key to it. Initially, making the right choices is difficult. As a new trader, it's hard sometimes to not feel frustrated about your losers. It's hard to not feel down when you're losing money in a row. It's hard when you've had 4 or 5 losers in a row not to want to go in bigger size and get all that money back. All these things, we've gone forever about it, but you get the point. That's the hard bit. It's getting over those hurdles of making the right choices is what will make you give you a better chance of success in your trading. All right, next one, guys. Trading decisions should be as unemotional as possible. That's Richard Dennis, the turtle trader guy. Makes perfect sense. You need to eliminate as much emotional into your decision as possible. Listen, we can harness the power of emotion, but harness it in a way of, hey, as Warren Buffett says, if you're fearful, you need to be, or others, you recognize others are fearful, that's when you need to be greedy. If you're trading, you should trade unemotional because the setups come out, it's just a triggered and filtered, yes, I need to take it. But perhaps if you are concerned, you listen to your gut, but the point is you don't shoot from the hip and just pull the trigger based on your gut. All right, leverage reduces the investor's critical asset, patience. Jeremy Grantham. So that's a really, really good one, isn't it? It's such a perfect thing, because we get so caught up in margin and dialing up the margin and trading on massive margin, especially for trading Forex, especially for trading indices. Put a little bit of money in our account, ramp the amount of money we can control right up, and off we go. And actually, all that does is it causes us pain. It causes us to be nervous. It causes us to be stressful. And the perfect word actually is patience. We lose patience because market moves in our direction, we get a decent amount of money, we want to take it. Market moves against us, we panic, we pull it out. Reducing the position size, whether you use leverage or reduce the position size and use the same leverage, same kind of thing. But the point is that you're dampening the emotional swings that you're getting for each trade if you're not so aggressive with your leverage. Good one, that. All right, next one, guys. Risk control is the most important thing in trading. Tudor Jones. Paul Tudor Jones, great guy. I talk about him a lot on this channel. I've studied him a lot. That's his big thing. Risk, 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 risk. And all the big players know that, guys. And that's a common theme running through all of this. And if we look here, Bruce Kovner as well, risk management is the most important thing to be well understood. So if there's nothing else you take away from this, if you've just joined this channel, if you've just stumbled across this video, if you've made it this far, it's focusing on risk management. If there's one big thing that you can make, lock down and secure, that's going to give you the biggest improvement in your trading, it's risk management. It's having a plan for how much maximum you're going to lose. It's when you're going to come out of a bad trade. It's your position size. All that stuff you can control. And if the only one thing you work on in your trading is risk management, you'll see yourself go from there to there very, very quickly. All right, guys, there's some quotes for you. Hope you enjoyed them. Thumbs up if you did. Much appreciated. See you in the next one. Take care. Bye-bye.